Everybody joining us from the CME, Bob Iaccino. I hope I pronounced that correctly, Bob. Correct me if I'm wrong.
Close enough, Tyler.
Was it close?
It's Iaccino.
Iaccino.
It was very close.
Iaccino. That was close enough, right? Iaccino.
Sounds like a hockey player.
Yeah. Let's talk a little bit about gold. It is up yet again today. Is there anything that could derail this rally in gold, and how far might it go?
You know, I'm on record as saying that gold was capped at about 1850, so you're probably asking the wrong guy. It looks like 2000 is well within reach. It's a psychological number that everyone's been talking about, but gold seems to be viewed by traders now as the only currency that there's a really limited supply of, whereas every other currency around the world can just be printed and purchased and distributed. So I think gold is something that people definitely want to hold on to right now. I don't particularly care to get involved above 1800 from a trading perspective or an investing perspective, but the investor levels, from my view, have crept up over the last 18 months from 600, 700, 900 to closer to 11 or 12 or even 1500, where investors will come in at a buy and hold sort of a mentality.
Something is driving, you know, gold, it used to be that people said it was a hedge against inflation. Well, there's not much inflation in the world right now, so something else very fundamental is driving the gold price, right, Bob?
Yeah, there is, and I mean, it's a fear trade as much as anything else, and again, it's considered a currency right now, which it really hasn't been considered over the last 10 years. You're looking at a situation where the yen, it continues to be one of the safe havens. The Swiss, with its lower liquidity globally, continues to be a safe haven, and gold is seen as the one that really doesn't have a downside in a global crisis, an economic crisis, so to speak, as well as any sort of crisis. Again, I don't know that I agree with that, because I don't know what you would do with that gold in that worst case scenario, but it's definitely being viewed that way by traders and investors as well, and there's just no sellers of gold at this point.
Bob, how about a repudiation of Keynesian economics? And I know that might be a little too wordy, but the reality is that a repudiation of Keynesian economics equals higher gold prices. I tend to look at 2-year yields and 10-year U.S. Treasury yields as my lead indicator for gold. In other words, if real interest rates are negative, I got to own something that actually goes up, and gold obviously is one of those things.
Well, yeah, and I mean, you're talking to a trader here, or somebody who more looks at things, making money and things going down as well as going up. So I don't particularly look at it that way, but I understand your focus on the 10-year yields versus gold. Again, it's something that investors definitely want to hold on to, and I don't think that's going away. As I said a minute ago, you used to have people that would want to buy gold 500, 600 and just hold on to it. I knew a guy on the trading floor that's been buying gold coins every month since about 1994, and in 1994 everybody thought he was nuts, and now everybody kind of wants to live in his basement. So it's one of those things, people want to hold it now, as you said. But it is something that you need to own.
Is the downside risk if Bernanke doesn't deliver on so many people say QE3 is on the table? Is gold pricing in that's coming? And if he doesn't deliver on Friday, then is it going to go down?
Definitely, and I think you hit on something very big, Michelle. When I'm looking at the S&P is starting to base, in my opinion, again, from a trader's perspective, from a shorter-term perspective. I don't believe the long-term investors are coming back yet, and I think they're quite a ways away from coming back into the S&P. Having said that, Bernanke's, what I consider to be the biggest speech of his presidency, is what could trigger that basing pattern to rally up to 1206 in the S&P and then 1276.50 after that. Okay. If that doesn't happen, then gold continues to rally and rallies quite strongly.
Right. Bob, thanks very much.